What's going on, traders? It's John with Bull-Throttle Trading. I wanted to make a video for a lot of you guys who are starting out to kind of help you learn how to look at candlestick charts. I know a lot of you guys are starting out on different platforms like Robinhood and Webull, which are great platforms, but they don't offer a whole lot as far as an analytical breakdown or a technical analysis, basically, of what's going on with these stocks to help you get an idea of what kind of movement you might be able to expect from them. In this video, I'm just going to kind of touch on looking at basic candlestick charts and how you can kind of use them to help find opportunities in a certain stock or ETN that you're looking into trade. So if you guys are ready, we'll get started. Alright, so let's start looking at this graph here that's showing you we have two candlesticks. So we can see we have a bullish candlestick and a bearish candlestick. And the way that you can tell these apart by whether they are green or red. So we can see the green side here, this is a movement upward, and this is a movement downward. Now what a candlestick is showing you on a graph is it's showing you how much a stock moved within a certain time frame. And this time frame is going to depend on which chart you have open. So there's like standard chart whatevers that traders use, and one of them is the 1 minute chart. So that means that each one of these candles represents movement of that stock in a 1 minute period. Okay, there's also a 5 minute period. So one candle would represent how much that stock moved in a 5 minute period. So it doesn't matter which time period you're on, the candles still work the same. It's just, you need to pay attention to whatever graph you're looking at, because it's going to show you different momentums, based on, am I looking at a 1 minute chart? Am I looking at a 4-hour chart? There's a lot of different options. So, all right, looking at the bullish candlestick. Bullish is always going up, So what this means is, let's say at 9:30 Eastern time when the market opens, a stock opens up at this price point, okay? And then once that starts at 9:30 and 00 seconds, all right, we started here, and then in that first minute, the stock dropped to this low point, okay? And then after it hit this low point, it bounced, and it started to go back up. And it came all the way up to this high, okay? And then it dropped again. So it dropped down to this point. Now let's say at this point, the clock strikes 9:31. Okay, so now, boom, a new candle starts forming next to this candle. And this is showing you, okay, so that from 9:30 to 9:31, this candle is showing me a representation of what that stock did in that minute, okay? So this little wicks on the tops and bottom, they call these wicks. These are price points that the stock hit that were not within the open and close period, okay? So if you're just looking at 9:30, the stock was at this price. At 9:31, it was at this price, okay? And then these sticks show you that even though it climbed up to here, at one point in that first minute, it had actually climbed up to here. But by the time, the 60 seconds had gone past and a new candlestick formed, the price had moved to here. Okay? So this is showing me, okay, the price overall moved from here to here within that minute, but it also reached these lows and these highs. Okay? Now let's look at the bearish candlestick. This is the same thing, just in a backwards direction, okay? So what this is showing is, okay, at 9:31, the stock started at this price, okay? And then from there, it jumped back up to this previous high that we had here, and then it started to go down, and it went all the way down to this low point. And then it bounced at this low point and came back up. And then when it got to this point right here, the clock had struck 9:32. So now, boom, a new candlestick starts forming next to this one. So now this candle is representing that, okay, from 931 to 932, overall the stock moved from this open price to this close price, but we can see by these wicks that it reached highs of here and lows of here. Now, why are these wicks important? Okay, these wicks will show you how traders are reacting at a different price level. So, sometimes you might see candles that have no wicks on them at all. There might be a wick on one side and not on the other, meaning like, maybe there's a wick on the top but not on the bottom. Maybe this one is way longer than that one. And what that's doing is that's showing you, okay, like, even though this is the open and the close of where the stock was in this time interval, if this top wick was way higher, then that is showing me that, okay, it was trying to get to these points, but it was rejected. And the longer that this wick would be means, okay, this is the further that it tried to get to, but it was rejected and it came back down. So this is an indicator that's going to show you, like, okay, this stock might actually break above this point or continue to move up because it's getting there. And if there's no wick on the bottom, then that means, okay, then it's only been moving up. And I should be doing this on the green, not on the red. My apologies. But use that same mentality with the green candlestick. So if it's going way up here and this wick is way longer, then it's showing me that it's fighting to get there and it's getting rejected. And the same thing can happen on a red candle. This wick can be way down here, showing you that it's getting there but being rejected, but it's showing you that it could potentially, this next candle could start to move in a downward trend, or vice versa. So this is how we use candlesticks to help figure out what a stock is doing and how we can try to help see where it's going. Okay, so now that we know how to read candlestick charts, let's look at a real life example and see what we can gather from this chart. Okay, so right now I have a chart up for you guys, all right, and we can see, all right, let's use our knowledge. So this first candlestick here, we're on a 5-minute chart. We can see right up here in this top right corner. So each one of these candlesticks represents what a stock did in a 5-minute period. And if you want to know what that 5-minute period is, we can look down here at the bottom and we'll see, okay, this is 10 a.m., 10:15, 10:30. And if you hover over it, it'll show you the exact 5-minute interval that you're on. So with this first candle, we could see that this is from 9:45 to 9:50, okay? So that means at 9:45, we opened up at this price point, which is about $31.10, okay? And then in that 5 minutes, this dropped all the way to lows of $30.86, and then bounced and came all the way up to these highs of $31.35. Then continued to drop back down, and then met this closing level of $31.25. And at this point, the clock now struck 9:50. Boom. Okay, so now we can see we opened up right here at 31.27. Okay, then we jumped up to these new highs of $31.40, and then dropped all the way down to $30.91, and then pushed back up and closed at 31.22. And now this means that, okay, this was at 9:54.59, and then at 9:55, boom. Okay, now we move on to the next candlestick. Now, as we can see by looking at this candlestick, this is over the course of one day. So this was last Friday. Okay, so we can see that we can kind of start to form a pattern of what this stock is doing. So we can see that, all right, the market opened and this dropped and it reached these lows, and then it tried to start pushing up. Okay, we all know a stock doesn't just go in a straight line. You see like these little staircase patterns. There's up and down. It's a roller coaster. Okay, so we came down very aggressively. We can see, you know, these longer candlesticks showing us, okay, this is picking up momentum in a downward trend. Then we bounced and we started to come up and we hit these highs of $30.47. And then we started to drop again. As we can see, we have this very, very long red bearish candlestick, okay? And then we got all the way down to these lows of $29.01, okay? And then we bounce, okay? So we hit this point. Oh boy, what did I do? I don't even remember what day I was on. Okay. This is not the same one, but we could still use this chart. So, all right. Again, with this one, the market opened, we climbed up, we dropped, and we hit this level. Okay, this is what's known as a support level. This is where the stock is falling and it finds a support. This means that, okay, there are traders out here that see that, okay, when we've reached this level, roughly, I now see a value in this stock, and I am willing to put my own money in this stock and purchase it, and it starts to go up and increase in value, okay? So now we hit this top point right here, okay? This point is what's known as a resistance. So this is, it's like the ceiling where, okay, the price of this stock has risen up to this point and people are no longer seeing value in it. And they're like, I do not want to own this stock more than this price. It doesn't show me that it has value at this price point. And then it starts to go back down again, okay? So this is what we call a resistance. We have support here, we have resistance here, okay? Now, as a day trader, we want to be able to recognize when a stock hits a support and starts to bounce. And then we want to be able to find these resistance areas, because if you were buying this stock, okay, wouldn't you want to buy down here at this low price and then sell it at this high price before it drops back down? Now, obviously, in real time, we don't know what this stock is going to do. It's easy to look at this chart and be like, oh yeah, it bounced right here. Okay, perfect. Now, we don't always know the best spot that we're going to find this resistance point. I mean, obviously, we would all want to cash in our profits before a stock tanks. We want to max our hugest potential for margin, okay? But we're not always going to know where this point is. So how can we use these charts to get a better understanding of knowing where to buy and where to sell? All right, well, let's say we continued following this and we hit this resistance level and we came down, okay? And now we've got these lower lows here. See, we had a high, a low, then we had a lower high because it didn't get to this point, and then it came back down to this low, but it kept going. So now we have a lower low, okay? And now we have a new support level, okay? Now this is going to show you this stock is in a downtrend. When you see this lower highs and lower lows, that's telling you that this stock is downtrending, which means this might not be a great stock that we want to invest in. What we want to find is okay, where is going to be a good bounce point where this stock is going to start to climb, and then how do we know how high it's going to climb before we should sell it? Now again, you don't want to focus on one indication. We want to use multiple indication to best evaluate what a stock is going to do. So let's get back to this example. We drop down, we hit this new lower low, and then we climb back up and we hit a new resistance point here, okay? So now this high is lower than this high, which was lower than that high. So again, we're making lower highs, okay? And lower lows. Now we could see when it bounced at this point, we hit this new support level. So this is now our next lower low, okay? Now, as the stock starts to bounce back up, we can look at previous resistance levels, okay? So we know, all right, we've been making lower highs and lower lows. When this stock starts to climb back up and we notice that it's approaching a previous resistance level, then we know, okay, there's a chance that this stock might now start to change direction, okay? So now that we're getting to the same level of highs, we can see that when we reach this level where it topped out, this is a resistance level again. When we reach this resistance level a second time, we actually found that resistance, and this is where the wicks of the candle become important. So both of these wicks are showing me that we got above this previous resistance level, okay? So we broke past it, and now that is a higher high, is it not? I mean, we could look at this and see we reached this high, and now here we got a higher high. So now, okay, this stock might change direction. This doesn't necessarily mean that we want to buy just yet. We always want to wait for confirmation. As traders, challenge ourselves to be patient and let a stock show us that, okay, we're going in the direction that I have value in, and now it will be worth me putting my hard-earned money into something, okay? So we don't buy yet. We see that we reached this point. Both of these wicks got up above this last resistance level, but as we can see, they were rejected. So we got up above it, but this candlestick closed here, which was at the same level. And then this candlestick, same thing. It tried to go above it again, and it was rejected. So now we could see, all right, the stock is starting to go down, but now look at this. Now we have a new support level. We've made a higher low. So we had lower highs and lower lows. Then we hit this bounce point here at $25.60. And now we're starting to move upward. So what happened here? We hit a newer high. We have higher highs here, okay? And now we went down, and now we have higher lows. So now by looking at this chart, we can see that the staircase pattern is now going up. All right, and we could even break this down on each candle level. We can see here that it's doing that, but you don't want to dial in too deep because you want to be able to get a little bit longer term of what this stock is going to do. So we can see, again, it's still good indication. We're moving upward. Okay, so now we have this higher high and this higher low. Okay, so now when this candlestick happened, we can see that we got up very quickly. This was 1 5-minute period. Here, like this was taking 5-minute increments to get there. Boom. 1 5-minute period, we blew past our previous high and hit a new higher high. Okay? So now we have this new boundary right here that we've hit. So this is our new resistance. Okay, well we can see we had a higher high, a higher low. Now we have an even higher high, and then boom, we have a higher low. So this is now showing us that we are in an uptrend. So we can see when we get to this bounce point, when this stock comes back up to this previous resistance level, we don't know if it's going to go up or down. If it starts to go back down, then we wouldn't have wanted to bought in here because, all right, yeah, we could have had a little bit of a gain, but we're going to lose it again, okay? And then it could continue to go down here and ultimately end up, instead of breaking even, losing money. So as an investor, as a trader, challenge ourselves to wait for confirmation of direction. So in this 5-minute period, when we see this stock reach this point, now we're on high alert. What is it going to do? Is it going to continue to go back up, or is it going to bounce and go back down? We see that it now breaks above this point and now reaches higher highs. Now this is an opportunity where you might want to take a position, okay? This particular one, if we would have bought at this price point and rode it up to the highs, we would have had about a 1.75% profit of margin. And we know that our lows could have came down here, which is about 1.25% loss. So would this necessarily have been a great trade to take? No. If you're not under the PDT rule and you wanted to enter this position here, you can capitalize on that 1.5% or whatever it was. But again, now we don't know how high this is going to go, right? So we see that we reach these levels, and this is where we're going to use other indicators to help us see. We might be able to help predict where these new resistant levels are going to be at. And we'll get into that in other videos, but for now I just want you to get the idea of how to read these candlestick charts, okay? So again, now we can see we hit this level, we started to go down, and then we came up here. Now we had lower highs, okay? We got this new level. Oh boy, I gotta quit doing that. Is it this one? Yeah, okay. So we reach this new level here that's lower. So we're now getting lower highs and lower lows. So now we could see that this stock is now starting to trend downward, okay? Now you can see that these two lows are kind of close to each other. So it's giving you an idea that, okay, when it reaches this point, this is still now a bit of a support level, okay? So as stocks move, they tend to go back to their previous supports or resistant levels. So we can see that when it drops down here, it came down to this point, which is fairly close to this point, and it started to bounce again. So these are the kind of patterns that traders look for to try to get a better understanding of what a stock is going to do. All different stocks are going to have different patterns on their candles because they're all in different industries and they trade differently. But this is just an intro of how you can start to look at these charts and see, okay, I have a better understanding of how this moves, so now I have a better understanding of where to buy and where to sell in my day trading. So if you guys feel that this provided some value and would help you in your own trading, please feel free to hit the like and subscribe button. This way you could stay tuned on all of my new downloads and videos and lessons. And hope you guys have a good one. Thanks a lot.